Trading is a very, very hard industry. It's probably the hardest career you could choose to pursue. Now, the reason for this is simply because there's 1,000 different ways that you can go about it. There's hundreds of different trading systems, there's so many different markets that you can trade, and there's no real clear path. So in this video, I'm going to show you what I would have wanted to see before I started trading. What I'm about to teach you or tell you is certain things that I picked up along my journey, and basically this is exactly how I would go about it if I had to start all over again. This is the exact system that I would use. So if we take a look at my screen, you'll be able to see stage 1, okay? This is when you first start trading out, right when you discover it and you get that euphoric feeling. What happens to most of us during stage 1 of our trading journey is that we are filled with euphoria. We're filled with motivation and we have this drive to just keep going, keep going, and keep going. That drive and motivation that you have during stage 1 will typically last 3 weeks, maybe a month. Now, the reason why it's so maintainable to continue to have that drive and motivation for the first few weeks is simply because of beginner's luck. A lot of people start out trading with what we call beginner's luck. A lot of people will win all their positions when they first start out, and this will literally set them up for failure because they get that euphoric feeling and it gives them false expectations as to what trading really is and the things that they're about to encounter, because obviously it's not just sunshine and rainbows and you don't have it figured out 3 weeks into trading. Instead, what I believe every single person should focus on is chart time or just experience in general. Now, when I say chart time or experience, I'm talking about looking at the charts, observing what goes on, picking a specific market to monitor. You find out its tendencies because you look at it so much. You simply just want to gather experience by looking at whatever market it is that you want to trade. So if I wanted to trade Euro USD, I would spend the first 6 months simply just looking at Euro USD every single day during a specific session, because what ends up happening is there are certain patterns in every market that happens in different sessions. So for example, I trade primarily the AM session of New York and I trade NASDAQ futures. There are certain things that the NASDAQ will do in New York AM session that it won't do in the PM session, right? That's what we call tendencies. These things are extremely important to know about, and the only way you know about them is if you observe. So getting in chart time and simply just looking at the market that you're trading and observing, taking notes, figuring out if there's anything that repeats over and over again during a specific time window. The next thing is obviously going to be simulated trading, which is demo trading, paper trading, whatever you want to call it. You're essentially trading and not risking any money. Now, yes, people will tell you that paper trading doesn't matter, blah, 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 but it absolutely does, because one thing is, observing the market, looking at it. Another thing is being able to execute when you're supposed to execute. Now, it's obviously not super hard to execute on paper because, again, you're not risking any money, but it's the closest thing that we're going to get to live trading, so a real account. So don't listen to the people that tell you, stuff your account with money right when you first start. That's ridiculous. I think you can really build up good habits and you can find your trading system all on paper and then replicate that same system and just way of looking at the market on your live account. But it's important that you stay on a paper account, in my opinion, for at least 6 months. So for the first 6 months, I would simply observe one market during one session every single day. I would take notes to that session. Is there anything that repeats? Do we see any similarities? Is there something happening at a certain time during this session over and over again? All while I would be demo trading whatever system I had found during that session. So I would not be trading with live money, but I would be trading paper money during one session with one strategy. The next thing I want you to focus on, or I believe people should focus on, is repeatability, okay? Repeatability is a very underrated thing when it comes to trading. Not a lot of people talk about it. Now, when I say repeatability, I mean your trading system is supposed to be repeatable. A lot of people will get very complicated systems like Wyckoff, and although they can work just like anything else, they're simply just too hard to repeat, right? You want to be able to approach the market and instantly be able to tell if this is a market for you. Is my system going to be present here? Is this a market where my system works? And the only way to get to that stage is if you have a system that you have simplified enough so that it becomes repeatable. Do not get caught up in analysis paralysis and all these different YouTubers telling you to trade Wyckoff mixed with CRT and all these fancy things, okay? They're simply there for the views and it looks good. It does not matter if it looks good or if the video has many views. What matters is money going in your pocket or not? And in my personal experience, the only time when I really, saw a change was when I accepted the fact that trading does not have to look fancy. It does not have to be hard. It has to be simple and it has to be repeatable. And the last thing I want to talk about in stage 1 would be data collection. Now, when I say data collection, I mean journaling all your positions, journaling your emotions, journaling when you are looking at the market. You don't even have to be taking a trade, but you can journal different things. So for example, if I notice that, okay, at 10 a.m., we typically see a reversal if the overnight session trended on Euro USD. Well, that's something I can journal. How often does the 10 a.m. reversal happen? Does it only happen if the market trended during, the overnight session? What has to be present for this 10 a.m. reversal to take place? All these different things is something that I believe you should journal and keep. But most importantly, journaling all your positions, that is losers, break-even trades, and winners, okay? I want detailed journals. I want to be able to ask you in 2 years, hey, what trade did you take the 22nd of October 2024? What did you place? Did you make money? Did you lose money? What was the setup? What was the system? What was the market conditions? What was the economic data that we have for that week? All these different things I want you to be able to answer at any time in the future, which you're only going to be able to do if you seriously journal all your positions and everything in between. And that is what a proper business looks like. Now, while trading isn't an actual business, I want you to treat it like one. So if you had a, profitable ecom brand, you would without a doubt be able to show me statements of, what happened during this day, what did we sell, what was the margins on this, right? All these different things you would be able to tell me in 2 years if you ran a sustainable and good ecom brand. So if you would do it with a regular business, why won't you do it with trading? You are trading against people who are taking this craft very seriously. So you simply cannot expect to take money from these people if they're outworking you and you're not willing to put in the bare minimum. Now, it becomes very, very clear that this is something a lot of people do because even the institutions do it. Hedge funds make their traders journal all their positions. They have to be able to provide a weekly statement of what happened during that week, a monthly one, what was the P&L, what was the pips, or what was the contracts traded, all these different things hedge fund traders has to provide to whoever's in charge of the hedge fund by the end of every month. I'm not saying every hedge fund does this, but hedge funds generally make their traders journal all their stuff for data collection purposes. You're not going to become better if you don't know what you're doing wrong, and the only way you know what you're doing wrong is if you're writing it down. The same goes for the hedge fund. At the end of the month, everybody turns in their data and then they go over it together and then they figure out, okay, what did we do wrong this month so that we can do it better next month? And that is exactly what you should be doing as well. At the end of every week or at the end of every month, you take all the data that you collected throughout that month and then you figure out what you did wrong so you don't do that same thing the next month. Now, moving on to stage 2, okay? Stage 2 is 7 or 8 months into trading. You know what it's about. You know it's not easy. You don't have that euphoric feeling anymore. And you are operating off of discipline and not motivation. That is what I would consider stage 2. So in stage 2, that is when we move into real trading. Now, whether that's a prop firm account or a personal account is completely up to you. I just want you to move away from the simulated trading and start trading with real money. Now, the reason for this is simple. When there's money on the line, you may not be able to replicate what you've been doing on paper simply because you become more hesitant, right? You start overthinking because suddenly there's something on the line. But I want you to get familiar with it, okay? I want you to look at it as experience. So if you go to university, you pay for lessons. In trading, it's the same thing. Losses are lessons. Look at it like that. You pay for lessons just like you do anywhere else in life. So do not be afraid to lose money because you're essentially just paying for experience and information. So going over and switching from the simulated trading to real trading is essential in my opinion. And I think around the 6, 7, or 8 month mark is when you should be risking money. You should be trading with real money because obviously one day you want to make this your full-time income, I imagine, or just make money from it. You're not going to do that by trading a paper account for 3 years straight, right? So we do want to take the switch from paper trading into real trading fairly fast. Statistical and probabilistic mindset. Now, what do I mean by that? Well, trading is a game of probabilities. You need to be able to look at something and see, okay, well, statistically, this will make me money. If I do this consistently, this will make me money in the end. Now, you may lose money for the first 10 days, you may lose money for the first 15 days, but statistically, at the end of the year or at the end of the month, whatever you're going by, you are going to make money. You know that because during stage 1, you gathered all that experience, you gathered all the data collection that you needed for stage 2. So you know you have a statistical edge in the market, right? So now all there's left for you to do is to repeat that system, which you have also done in stage 1, right? You had focused on a system that was simple so that you can repeat it, which is exactly what you're going to do on the live account. But it's so important that you trust your trading system and that you start looking at it from a probabilities point of view. So do not look at it from trade by trade. Look at it from the next 10 trades, 20 trades, 30 trades, not the next trade, because the next trade does not matter. What matters is the result at the end of the month or at the end of the year. So it does not matter if you lose a trade. It doesn't matter if you lose 2 trades. It doesn't matter if you lose 3 trades in a row, right? Because you know that statistically you're going to make money as long as you keep doing that same thing over and over again. Regardless if you lose 5 in a row, you are going to come out profitable in the end. And that is why it's so important that you learn to think about this in probabilities and not trade by trade. Risk, rules, and habits, okay? This is something I talk a lot about in my private community because it's super important. A lot of people will have a red day and think they did bad and have a green day and think they did good. When in reality, your P&L has absolutely zero saying in how well you did that day. What I mean by that is you could have a red day and have followed all your rules, practice good habits, and manage your risk, but your P&L is still red. Would you count that as a bad trading day? Absolutely not. That is a profitable trading day mentally. That's the best day that you could have. It does not matter whether your P&L is red or green. Same thing goes for green days, right? You could have a huge winning day, but you only had that winning day because you over traded, you over leveraged, and you didn't follow your rules. That then means that green day is technically a red day, right? And that red day is technically a green day. So your P&L has absolutely nothing to do with how well you are doing as a trader. Again, your risk has, your rules has, and your habits has. Now, probably the most important one here is going to be patience, okay? And the reason why patience is so important is because this is going to take a long time. Now, even if you do all the stuff that I mentioned here and you never miss a day, it's still going to take a very, very long time, which is why it's so important for you to trust the vision. You have a vision in your mind and you must have enough trust in that vision to be able to continue because there's no guarantees. You're not guaranteed anything. The market doesn't owe you anything. Nobody owes you anything, which is why it's so important with self-belief, patience, and just trusting the vision. When I first started out, I had a vision and I trusted that vision, which is exactly why I was able to keep going, keep following my rules, keep practicing good habits, and keep managing my risk, simply because I knew that is what it took to get to wherever it is I wanted to go. Without patience, you're not going to be a good trader, first of all, because you need patience in order to follow a system. You'll never achieve the goals that you want if you're not patient, because obviously it requires a lot of patience to do something for maybe 3 years straight without getting the results that you want or expected. That requires patience and that requires trusting the vision. Now, the last stage, which is the stage that all profitable traders are in, the only thing left to do is to continue to have discipline. Just because you're profitable 1 year or 2 years does not mean you're going to remain profitable, okay? The only way you remain profitable is if your discipline stays in check. Because regardless if I've been a profitable trader for 30 years, throughout all those 30 years, it requires discipline from my side to be able to follow my rules, practice good habits, and be a risk manager, okay? That all requires discipline. Now, how do we make sure that that discipline stays intact and doesn't fall off? Well, one thing is making sure that you are disciplined outside of the market as well, because that is going to reflect onto the market. So that could be going to the gym, eating healthy, getting 10,000 steps in a day. These different things may not look like they're, attributing to your trading success, but they are. And it's therefore important, even if you are making money, to continue to practice good habits also outside of the market, because that is going to allow you to continue to have the discipline needed in order to follow your rules, building good habits, and managing your risk. Now, that was it for this video. This was just a quick rant about things I wish I knew before I started trading. I would have loved to had a video laid out like this, because this is exactly what I would do if I had to start all over again. So I hope you enjoyed this video. This was years of knowledge given out in about 20 minutes. So thank you a lot for watching, and I'll see you in my next video.